So yesterday on the 26th of February, I've got a perfect example in this video of why environment matters. On this chart, you see the NASDAQ. And NASDAQ pretty much traded as an A-plus bullish environment for me. And I was expecting a continuation towards the upside. But at the daily highs, a head and shoulders pattern formed, and that triggered a 2% sell-off towards the downside. Initially, I did miss the breakout, but trading isn't about catching the move first. Once structure confirms the bearish move, that's when I shifted my bias and used precision execution to capture the move lower. In this video, we're going to be talking about how the environment shifted and where the precise entries actually happened. So for context, real quick, we were above the POC, market state was bullish, and we were out of the VWAP deviations over here, and that's where I take my first trades. A little bit of context, you can see a little bit of a head and shoulders right there. So I execute a bunch of positions, a little bit more here at the retest of the support, and I target the previous high or the current high to get out. Once the market continues going down and another head and shoulders forms, what I do is I target the previous or the current high one more time. Beyond that, this is the head and shoulders I was talking about at the daily highs. I do try to take some positions here. They were valid, took an L, they were valid, took an L. Missed this big move, but then precision entries start happening. And just as a fun fact, check this out. You can see how we've got this shaded area here, and we have another shaded area down here. Now, as we come out of this shaded area and come retest this level here, I find a high and I start shorting. I find another recent high here and short some more and take profit where? At the previous shaded area. Once price confirmed that there is another resistance up here, took some more shorts, added some more here on the way to the POC, and got out here again. Now you can notice the same thing happening again. Shaded area, nothing, shaded area. Unfortunately, I missed this, and I don't ride my winners towards the downside. But then something magical happens again. We hit the shaded area, we come back to the POC where we form a resistance, and we start going lower. I couldn't trade more. I was about to watch a football game, so I closed all of my trades. Even though the market gave me more A-plus entries, such as this one right there, I just didn't take it. The market then gives me another entry here with a head and shoulders right at the POC, but I don't take it either. Now, the lesson in this video is quite simple, actually. Follow the market. Trade what you see, not what you predict. Stop predicting the markets. You're not a guru. You don't have a magic ball. When you stop trying to be right and start listening to price, the market tells you exactly what to do. Just wait for it to speak.